Well, in yet another sign the economic recovery is stumbling, commercial real estate prices in June dropped the most in almost a year. The value of malls and shopping centers around the country, well, they're down 11%. In our continuing Property Pulse 2010 series, we focus on commercial real estate with Dr. Sam Chandan. He's the global chief economist at Real Capital Analytics and also an adjunct professor of real estate at the Wharton School. So, Dr. Chandan, good to have you with us.
Thank you, Betty.
Appreciate it. And, before we get into some of the specifics, I mean, some have said, look, the housing market on the residential side, it's just slow going right now, but it seems to have hit a trough. Is that the case in commercial real estate? Have we hit that yet?
I think there are a couple of different commercial real estate markets here. When we look at what's going on the debt side, default rates, delinquency rates, foreclosures have continued to climb over the course of the last couple of years. And where we really see the worst of that is in the concentrations in construction loans. As you can imagine, incomplete projects that may be only approaching completion have very low recovery rates. When there's a default, there's no income to support the payments that have to be made by the borrowers to the banks.
Right.
And those loans are concentrated on the balance sheets of smaller community and regional banks in the United States, making it very difficult for them to manage those losses while other parts of their balance sheet may be facing challenges as well.
Right. In fact, we've been quoting a Deutsche Bank report that basically said, these construction loans on commercial property is perhaps the worst toxic asset out there for any bank, right?
I think it's fair to say that when you think about for these regional community banks now that face some of the real risks over the course of the next couple of years in terms of how they manage some of these.
But aren't they failing? These community banks are failing partly because of these loans, right?
We have seen a larger number of banks failing over the course of the last year. Certainly the expectation is that as we look forward over the next couple of years, there will be a larger number of failures as a result of these commercial real estate loan stresses. Okay. We've identified roughly 400 institutions that have a profile that suggests some real challenges for them in managing this.
Okay, and just very quickly tell me, in commercial real estate, the worst hit sector is still retail?
Retail, yeah, and part of that is, again, because of the discretionary spending from consumers.
Okay, all right, and we've got to wait for the job market to come back.
Absolutely.
For that market to come back. All right, thank you very much, Dr. Chandan, for joining us. He is the global chief economist at Real Capital Analytics.